For lecture 3, we learn about Australian personal taxation system. And in Australia, major taxes should be in income tax, capital gains tax, goods and services, corporate tax, payroll tax, and we need to pay attention about the financial year, like from July 1st to the second year's June 30th. And there are some change about the money amount from 19 to 16 for the first stage, and the second stage and the third stage also have some change. They use tax for federal, state, and local governments. That's a tax function. And for the tax return in Australia, in 1 year, taxable income should greater than 18,200. If you break ATO's trust, they will give you very heavy fines. And for the first return, we need to do it by ourselves and use the MyTax app. And second, you can use tax agent, or you also could use try to hire accountant. And we could calculate personal income tax by 11 steps, like calculate accessible income, deduct allowable deductions, calculate taxable income, and so on. And we have one example to calculate, and about the Lucy's net tax payment. And for kids, like people under 18, for the minors, the expected income, there are 2 stages. This is for some extra earn, but for the earn by work by themselves, the tax rate also as an adult. Tax treatment of alternative tax entitles, like part-time shape. Company doesn't need to pay tax, but people need, and losers could deduct. And for trust, it could be passed on the estate. For superannuation funds, it already paid tax. And how to evaluate common personal tax planning strategies? There are 5. Allowable deduction, income splitting, income timing, negative gearing, and salary packaging. To understand tax on investments, first is about interest from banks add to accessible income, and second, gains in value, like from investments, also for accessible income. And if you took the stocks less than 1 year, then no discount. But if you took more than 1 year, then you get 50% discount. And the rent for property, also for accessible income. And one point should be tax-free from primary residence. And the fourth dividends on shares. Fifth, leveraged investments. If you borrow money to investment, interest could be deducted. Investment tax strategies in Australia, we just pointed like negative gearing, franking credit, superannuation, interest offset account. For tax avoidance and tax evasion, like we could take like salary sacrifice, superannuation contribution, CGT discount, negative gearing, and family trust to reduce the tax in the legal area, but don't try to take tax evasion. Thank you.